Well, great. Well, yeah, go ahead.
All right, okay. My name is Anthony McGee, real estate broker here in Charlottesville. I think I'm now in my 37th year, which is kind of hard to believe.
That's amazing.
A little bit of background about me. I obviously own a real estate company. I don't do as much listing and selling as I used to. I kind of transitioned to another passion, and that's, fix and flip. Building, and I'm going to get into that a little bit with cash contracts on that topic as we get through this. And then we got Bill.
Yeah, so my name is Bill Bader. Been doing this for close to 21 years, not quite 37, but still getting up there. I am the sales manager for Waterstone Mortgage. I've helped thousands of families get in houses. I'm considered top 1% loan officers in the country. And yeah, I'm excited to go over this presentation with you to bring some of my knowledge over the last 20 years. And yeah, that's basically it. So, yep.
All right. So when Bill and I were meeting to go over this, we wish we had changed the name of it because I think we would have gotten some more participation in it. But it's right now it's called What is a Cash Offer? But we thought that probably our approach right now to this is competing with a cash offer. We know that is a challenge in our marketplace right now, given the amount of cash offers that are out there, is that when you're working with someone that doesn't or isn't offering an all cash offer, how do you compete with that? And so that's one of the things we're best going to try to get into this in this course. And we're going to start with very basic stuff, most stuff that you guys probably already know, but it kind of lays the foundation to really what we want to get into. Now this is the first time for us doing this. So, and we had to come up with this because they came to me and said, can you do a session on cash contracts? And I was like, well, okay, what is there to talk about? It's a cash.
Given it's almost 5 after, perhaps I'll start.
But if there's something that we don't cover that you thought maybe we would cover or like to cover, talk to us, ask questions. Because again, with us, this being the first time for us doing this, there may be some things that you were expecting out of this that we're not covering. So we'd like for you to ask those questions. So again, we're going to start with very basic information, like what is a cash offer? A cash offer is an all cash bid, meaning that a home buyer wants to purchase the property without a mortgage loan or any other type of financing. These offers are often more attractive to sellers because there's no buyer financing, obviously, usually no appraisal, and it's a faster close time. Now, what are the prevalence of cash offers? And when I looked into this, I was kind of really surprised. And when I first got into business, I think that we were just single digits of cash offers. But over the years, I think we peaked in 2018 with about 38% of single family homes and condos being purchased by cash. We're back at that number again here in 2024. As of February of this year, 38% of all houses and condos are selling for cash. And that's a much higher number than I thought it would be. So in terms of what areas of the country that have the most prevalence of cash offers, usually it's in the South. For example, Montgomery, Alabama, 54% of their contracts are cash. Naples, Florida, 53% of their contracts are cash. And in Macon, Georgia, 51% of their contracts are cash. And usually what you're seeing in situations like that, those areas are high retirement areas. People are selling properties in other areas and coming down into those less expensive markets and paying cash. But generally speaking, in the current marketplace, the trend with cash offers is pointing to about a third of all contracts are cash offers. So let's go over a little bit of, and again, you guys stop if you got any questions or anything, because I can tend to breeze through stuff real quick, but let's go through the home buying process with cash offers. And again, a lot of this stuff you know already, but I wanted to touch on it before we get into some of the stuff you may not know. With cash offers, the buying and selling process is a little different than what it would be with a mortgage. And I think most of you guys know that. The process clearly is faster. With a cash contract, there's no mortgage application, there's no documentation, there's no underwriting, and usually there's no appraisal. A buyer would still need to get title insurance, or title policy that's still in the contract, provide proof of funds and sign closing docs. I'm gonna get a little bit on the topic of proof of funds here a little bit later. But some other ways that the process might be different is that usually there's a lot less contingencies. Most buyers who will pay cash would still want, however, to get a home inspection. Appraisals are obviously usually lender mandated, and Bill's going to get into a little bit with this later about appraisals, how you can take that out of the process with getting a mortgage, which I think would be greatly beneficial if someone's trying to compete with a cash offer. We're going to get into that. But usually with a cash offer, there's no appraisal, and the closing process is probably usually cut in half. The average closing time period for a cash contract is honestly just a couple of weeks. It usually is how fast you get the title work back and get the home inspection done. And the average for a finance deal is right now stands at about 43 days. And we're going to continue a little bit more about this. Generally, there are certain types of buyers out in our marketplace that usually offer cash. Investors looking for fix and flip, or big or people that pay for cash. And again, I'm going to get into it a little bit more. Or someone that's going to buy the property and hold as a rental. There's a lot of retirees that have savings, and they want to avoid the mortgage financing costs. And you obviously, another big one is people who have sold their home and looking to purchase a new property and have a lot of equity. And there's right now, because of values have gone up so much over the past 5 years or so, there's a lot of people sitting on a lot of equity right now in their homes.
I mean, that happens a lot. Northern Virginia is a perfect example of people selling Northern Virginia, having enough cash to come down here and pay for a house in cash. I mean, that happens a lot. So, yeah.
And then finally, obviously you got wealthy buyers who have a lot of cash assets, and those are the ones that usually pay cash. So what are the benefits, cons, and considerations for a buyer paying cash? So let's talk a little bit about title and escrow. A buyer would still need to get title or go to have a closing, basically. And in our area, most people use either a title company or an attorney to do their closings. Now, so a question for you, Bill: do you guys make recommendations to? And there in some areas, lenders have a lot of say-so in terms of who a buyer would use for a title company. Do you guys make any sort of recommendations usually when someone comes in, or you just leave it up to the realtor?
It's a combination of both.
Okay.
I would say most of the time we ask the agent who their recommendation is, or sometimes they ask us who we like in the area. And, we find people, because you as the realtor and us as the lender have dealt with so many title companies that we pretty much know the ones that are very good, that are efficient, that do a great job for their clients. And so a lot of times, at least in my case, is my team and I will talk to you as the agent, and we'll say, okay, who do you like to use? And oh, great, yep, they're great. A lot of times we confirm we use them a lot. So it's really a partnership. But I would say 80% of the time, you as the agent helps decide who that closing can happen. So yeah.
So another consideration is financial capability. So another major difference in that cash buyers need to prove their financial capability to the seller before moving forward. And that's usually done through proof of funds. Now, I'm always amazed how many cash contracts I present that I never get asked for proof of funds. And usually when it comes to someone paying cash, I think you have to vet that person maybe just as much as you would with someone who's getting financing. Because it would be good for you to know, okay, where's the cash coming from? All right. And to actually see that they have the cash in an account. Another thing that I think you want to pay attention to when you get proof of funds is whose name is on that. There have been times that I've gotten proof of funds and the buyer's name is not on it. Maybe it's mom, dad, whatever, but you got to learn to connect the dots as to where the money's coming from. But I would say that one of the most important things as a realtor on a cash contract in terms of vetting is learning about where the cash is going to come from and seeing that they got it. And so with a mortgage loan, as I said earlier, usually they're vetted already if they're pre-approved. So you know going into a lot of the financial questions have been asked and answered by the time they get to contract stage.
Right.
Okay.
Right. Theoretically.
Yeah. Not always, but you hope that's the case. So with a cash offer, that safety doesn't exist. So it's up to you as the realtor in the transaction is to kind of dig deep and to kind of know that you're doing business with under a cash contract.
Right.
All right. The benefits, cons, and considerations for buyers paying cash. So now the benefits for a buyer would be that clearly most of these you guys already know, that save hundreds of thousands of dollars on mortgage payments. The buyer offer is definitely going to look more attractive when it's presented. And the buyer will usually have reduced closing costs. So
significant.
Yeah, so you take me through that, Bill, real quick. What's the difference in closing costs that you off the top of your head, that cash versus getting a finance?
No doubt. So there's a big difference. So, you know, when you do a cash contract, you don't have any lender fees. You don't have any of the typical fees that come along with escrow for your taxes, for your insurance. So when you do a cash offer, I would say the closing costs are probably, to be on the safe side, maybe 1%, if that. And then when you do a real estate transaction for closing costs that has lending, your closing costs, you know, it's funny. I just had a talk with my team yesterday about this, is that the marching order for closing costs used to be 3%. They would always say in the contract that we would use 3% in closing costs, and that would cover the buyer's closing costs. But now that insurance has gone up, I don't know if you've seen homeowners insurance lately, but it's through the roof. Taxes have gone up, real estate taxes have gone up. So that number is actually probably pushing closer to 3.5% than it is 3%. So I think so you're talking about a difference between a cash offer and a finance offer of usually about 2%. And if you're looking at the average home price of $380,000 or $400, that's close to $8,000 savings versus a cash offer versus having financing. So,
okay.
Does that answer your question?
Yep. So what are some cons for a buyer to pay cash? A big one would is that once the money goes into the house, it's hard to get the money out. So they're not liquid anymore. So if, let's say someone pays cash for a house, Bill, and they wanted to get their money out, so that the max they could usually pull out if they did it that way is what, 80%?
80%, exactly correct.
So someone could always go in, offer cash on a piece of property if they really didn't want to pay cash, but wanted to compete for a piece of property, and then down the road or later just do a cash out refinance.
It's called delayed financing.
All right, delayed financing.
And that actually happens a lot.
Okay.
So
you want to go through that with me?
Yeah, absolutely.
Right.
So some strategies, and this is why it's so important that, the realtor and the lender have a strategy for their client going out there in this market to try to find offers. Because one strategy is, okay, well, does anybody in your family have cash? Does a family member have cash? Do you have cash? Can you take from retirement? Because what you can do is that in a highly competitive market, you can pay cash for the property, and then you can refinance that property within 6 months to get 80% of the cash back out. So that's a strategy that I use with several, like I can tell you probably in the last 6 months, I've worked with different financial advisors for clients to work on that strategy in particular, to go ahead and offer cash to make the offer look attractive, and then come back a month later and we refinance it to get the cash back. And in Fannie and Freddie loans, you're legally allowed to do that. It's called delayed financing. But the only caveat is you can only pull out 80%. So, but as long as you talk to the client, you talk to their advisor, you talk to the agent, and you go in with that strategy eyes wide open, then that'll make your offer a little more competitive than the next guy, because now you're offering cash and you're saving all those costs like Anthony just went over. Very good point, Anthony. Yes.
Okay. The other kind of buyer paying cash is there's no appraisal. So if you're paying all cash, then you don't have that circuit breaker that, okay, you might be paying too much. Unless you put into the contract, under a cap, which would be unusual. It's unusual to see it, but I suppose some people do it. They're going to pay cash, but it would be subject to get an appraisal. Most buyers that I see usually don't do that. So you're going to run the risk maybe of getting just too wrapped up into the moment with a piece of property, and you don't have that extra step that the lender is going to require of getting an appraisal to make sure that you're not overpaying.
Right.
Another con to the buyer paying cash is that they're going to lose out on that mortgage related tax benefit.
Right.
And there's a lot of people who that tax benefit to them is important.
Is that, well, I can tell you right now, I see tax returns all day. I would say probably 50% of consumers, their mortgage deduction on their tax returns are the biggest tax benefit that they have.
Yeah.
Like that's without, I mean, it might even be higher. I mean, I threw that number out there, but it's high.
Okay.
So
there's the cons to a buyer that are, and if you guys can think of anything else,
I mean,
that we're saying,
actually with smart, sorry, to go back to that.
Yeah.
And with smart financial advisors, I'm telling you right now, they understand the concept of not necessarily paying cash, but having that tax write-off for their clients. Because at any time, when I talk to advisors, like, yeah, my clients are debating pulling out this cash from their stocks, and I don't really want to do that, but I know they get a tax benefit. What are we looking at if they get a mortgage of like $250,000 and they're paying interest on it, and that's an equation that a lot of times I work out with financial advisors to say maybe it's always not a big huge benefit to pay cash because of that tax write-off. But at any time, if that got cumbersome or overburdening, or they decided, the tax benefit just wasn't great enough, they can strike a check from their advisor to pay for it. That conversation happens all the time as well, Anthony.
okay.
Yeah.
And again, if you guys can think of any benefits or maybe cons that we didn't bring up, just throw it at us, because we may have missed something. So what are some of the strategies of competing with a cash offer? And if you're, say, getting a mortgage, some of these are pretty obvious. You could always offer at or above the listing price is a good strategy. There's a number of cash buyers out there, because they're paying cash, feel like they can get a discount.
Oh yeah, isn't that like cliche out there that if you pay cash, you're gonna get a 20% reduction in price? I mean, isn't that that's the number one, right? I mean,
so that's one good way to compete. Obviously, just give them more money than what the cash offer is going to go. Another one, this is minor, but it helps. I bet, because I've seen it work. Write the seller an offer letter, and to make yourself stand out. And you say, does that work sometimes? Yes, it absolutely works. I give an example. I just sold a house up in Green that I remodeled several years ago, and there were 3 houses we did on one small road, and it became kind of like a really tight-knit community between these 3 people. And the person that was selling this house was so close to those other people, they wanted to know who was buying this house. And so it was very important to them to know who was buying the house. And honestly, they got an offer on the table that was more money, but chose to go with a different offer because they felt more comfortable with the other people who may be living in this area, or living in this house with these neighbors. So that I can't say that would work all the time, but it does. It's a feather on the scale in terms of tipping it to your favor.
It's not always about the money.
It's not always about the money with some people, and that's 100% true.
You are absolutely accurate with that. Yep.
Another way to compete with a cash offer, again, it goes back to the money, is to include an escalation clause, to basically show your willingness to pay more money. The escalation clause helps a buyer out because you have kind of built-in circuit breakers that you're not jumping from one number to another high number. You're going in certain amount of increments, and you basically the listing agent has to show that they've got another offer on the table at that number, and you keep that going up to a certain number. Say usually what we see is $1,000 increments. And then another strategy is just to consider, whether you waive any contingencies. What's been happening a lot is a lot of people waive home inspection. I'm not sure. I can certainly understand that you can make your offer definitely more competitive if you do that. But you're taking some risk by not doing a home inspection. I think if you're willing to pay cash for a house, you ought to know what you're buying. And I give you an example. I was dealing with someone last night. I sold their house here. They had purchased a house down in Alabama and got wrapped up into the moment, wrote a contract on a house without a home inspection. And let's just face it, there's a lot of people, man, you don't look in the crawl space, you don't climb up in the attic. If you're a buyer, that's what the home inspector usually does. And they end up closing and buying the house, and they realize they got a crawl space that gets flooded all the time. So their last quote to fix that was $30,000. So it's you can do it. I'm not sure I'd recommend it. You got to, again, it depends on the circumstances of the deal. But I do think if you're paying cash, you should always, whether you're paying cash or getting a mortgage, you ought to know what you're buying. And a lot of that has to do really how thorough of inspection you did, how old the property is. So I don't want to paint with a wide brush. If the house was built 2 years ago and you looked at it top to bottom, you're obviously going to minimize the risk with taking a home inspection contingency out in that particular situation.
Right. Yeah.
Now I'm going to have Bill get into a little bit more detail. Let's say you're in a situation where you're competing with a cash offer and you need to get financing. How do you get financing and make that look as strong as you can when you are competing against a cash offer?
Absolutely.
I'm gonna let you take the floor.
Yeah. So it's that is a very, I get this question asked all the time. How can we compete with these cash offers? They're coming here and they're taking cash. And so my buyer or my client is getting financing. Is there anything we can do to make our offer look more attractive to the seller that when I'm competing with a cash offer? And so there's several things that you can do. And so first of all, sometimes, there's exceptions to the rule. Sometimes they want a cash offer, like Anthony described, all the advantages to it, and they take that over not. But there are a little tweaks that you can do as a possibility to make your offer stand out against a cash offer. And so one of the things that most lenders can do, we can do it, is where we structure what's called a platinum pre-approval. Okay. And that pre-approval is different than a normal pre-approval because what's considered a platinum or gold approval has actually been through underwriting. It's cleared all the financing, it's cleared all the credit checks, the income checks, the asset checks, and the only thing that's contingent on that platinum pre-approval letter is the appraisal and title work. So when you go into that negotiation, you can say to that seller and that seller's agent that, listen, I am giving you what's called a platinum pre-approval letter, which basically means the only thing that's contingent is appraisal and title, and that's it. Now, so at least you can throw in there to say that that's all we need. We've already verified everything. It's called a platinum pre-approval. That's one way to compete. Now, so we've got it down to appraisal and title versus a cash offer. There is one more thing that you can do to get it so that it's just title work. And title work, even with a cash offer, they'll want to do that too as well when you have a cash offer. Is that right? So, so here's how pre-approvals work. When a client comes into me and they give me their income documentations, I look at their credit, I run it through what's called an automated underwriting system. And I put all their information in there, and then it spits out, yep, they're approved, verify this information, and you're in great shape. Well, sometimes if your client has a high enough credit score and they're putting money down, and the automated system can set a value to that property address, there are times where we can get a platinum approval and we can waive the appraisal. It takes a little more time for us as the lender to do that, but if you're in a multiple offer situation and you've communicated with the lender to say, hey, listen, we're competing here, you've got to put your best foot forward, let's platinum approval this person, can you run it through the automated system to see if we can get what's called an appraisal waiver? And then that platinum approval, the only item on that pre-approval letter would be title work. And so then that is absolutely competing with a cash offer. Now, that does take a little bit of work because you have to make sure you've partnered with a great lender that understands that platinum pre-approval and can get it done very quickly. Because, as you know, when you're competing, you as the realtor need to make sure you've got your lender on board with this client that, listen, I've ran them through, I've got them platinum approved, we're ready to go. And so make sure you're communicating with your lender that this is going to be a very competitive market, and I need that to be a very solid platinum approval. Once you have the address, you should be able to give it to them. They can run it through the automated underwriting system, and they can see if the appraisal gets waived. I can tell you that the only time that it gets waived, though, are for clients that have a higher credit score and that are putting money down. Like this doesn't pertain to, VHDA loans or FHA loans, or it's conventional money down, good credit score that you can get that appraisal waiver. So then that puts you in the ball game of saying, hey, Mr. Seller, I have waived all these contingencies. The financing is done. The appraisal is done. The only thing that it boils down to is title work. And you can assure the seller that that cash offer is going to want to make sure that it becomes clean title as well. Nobody's going to, even a cash offer, right, Anthony, won't want to inherit like a lien on the property.
And most contracts are going to call for that anyway.
Okay.
So in that situation, you as a realtor, if you have your client do that, and especially if they've been losing out due to cash offers, it would be a strategy to say, okay, how can we overcome this? To me, as a realtor, I would do my darndest, and I think you could convince the listing agent, hey, this is really going to be, they're getting financing, yes, but how we structured this, it's really no different than a cash offer.
Exactly. Yeah. And especially because that letter will specify that too. Like that platinum approval letter will say, listen, the only thing left is title work. So,
and it would be your job as a realtor to make sure you communicate that, because there's probably a lot of agents out there, listing agents, that might not initially understand or grasp that.
Yeah.
That this is a finance contract, but it has no contingencies with it from a lending standpoint. They're done, they're good. And it's really no different than a cash contract.
Exactly correctly. Yep. Yep.
So shifting gears a little bit, let's talk about the seller a little bit, with a cash offer. So obviously some of the pros of accepting cash offer from the seller side, is that there's a little risk, that you don't have to deal with buyer financing fall through. So there's no risk there. The closing process again is usually faster. Again, there typically won't be an appraisal, and the seller is going to get to avoid some contingencies there.
Right.
Are there any disadvantages? And I try to come up with some. There's not a whole lot. I don't think. Maybe you guys can think of some, but what are the disadvantages of a seller accepting a cash offer? One of them might be is that, again, you're dealing with a cash buyer who thinks that they want to get a discount. So if they want a cash offer, they may be leaving some money on the table with someone who wants to get financing is willing to pay more.
Right.
And again, with a cash offer, usually that buyer hasn't been vetted necessarily as well as someone who is getting financing. That's really where you, the realtor, needs to come in and make sure you vet that cash buyer, meaning find out what their source of cash is. Look at proof of funds, so that you again understand and know a little bit more about the situation with the buyer. And again, I write a lot of cash contracts, and I would say 80% of the ones that I submit, the agent doesn't ask me for proof of funds, which I always find
That
shocking.
is just shocking.
It's shocking to me that I don't.
I mean, so you accept a cash offer and they're like, oh yeah, no problem. Like,
and I guess they just think that if under a cash deal that, all right, well, if they default or something happens, it's a cash contract. Well, it's still difficult, as you guys know, forcing someone to close on a house, or even going through that default process with someone. It's hard. And you don't want to go through that.
And it costs money.
And it costs money on time and a lot of other things. And so, try to learn as much about that buyer, even though they're paying cash. Try to learn as much about them as you possibly can, prior to accepting or making a final decision about what offer you take.
Can I ask a question?
Sure.
Hi, what do you consider a good proof of funds? There's very loose idea what that is in our market, it seems like.
Yeah, and that's a good question. I mean, it comes from can come from all different sources. Just checking account statement, an investment account statement. Sometimes they may be getting money from a 401k or for some other kind of investments. And the reason why you want to know that is because sometimes that money can be a little bit harder to get out. It does vary greatly in terms of where the cash may be coming from. The most important thing is their name on it. And because I can't tell you where I've asked for proof of funds before, and it's got maybe mom's name on it, dad's name. And if they're getting the money from that's fine, but you need to understand that that's where the money's coming from. So the proof of funds is I would say it could come from anywhere. I mean, I don't, what do you guys look at in terms of?
Oh, we want at least a 30 or 60-day statement that has, or most recent quarterly.
You definitely,
so,
and that's a good point.
Look
at the date.
Right, exactly.
On the statement, you want something updated because they could go blow their money somewhere
or move it around, someplace else.
But I don't think there's any real hard and fast rule about one particular source, because a lot of people keep their money in lots of different places. So I would say that now if it's in a 401k or certain investments, it's not necessarily a deal killer, but it's good to know that's where it's coming from, because usually you need to talk to them about that as an agent, because usually there is a time period there in terms of getting that money out.
Oh, yeah, there is, yeah.
Okay.
Yeah, there's definitely the delay in that. When you liquidate a 401k, or it takes time for the financial advisor to sell those shares, to put that in the account and then get it over to you. So, I mean, not a long time, but it does take time. So we all, for lending, we always ask for 30 days of your most recent statement showing that you have the assets in the account to come up with a down payment for closing. So I would assume, Anthony, that when you're an agent and you get a cash offer, those would be the same requirements.
And then that's
So,
good, but you,
yeah.
you would look at it no differently than what a mortgage broker would look at it from them verifying
Right.
proof of funds to get the transaction done.
That's exactly.
You would look at it the exact same way in my mind.
Yeah.
So you're acting as what a mortgage broker would do for them to prove proof of funds.
Exactly correct. Yep, that's what I would treat it as. Yeah.
Any other questions? So source of cash offers for a buyer to get some money. So I'm looking at this from the standpoint of buyer and seller. So and Bill has probably seen this. So obviously a big one is mom and dad, the bank of mom and dad.
That happens all the time. Yes.
Because baby boomer parents have a lot of assets. They've got a lot of equity in their own home.
Mhm.
So a lot of times, kids can go have mom and dad pull equity out of their house, give them the money, then go back and do a cash out refinance, pay mom and dad back.
Part of the strategy, exactly.
So it's part of the strategy. So for example, mom and dad can get an equity line, give the cash to the kid, they close and pay cash, and then the kids will just do a cash out refinance to pay mom and dad back.
Yep.
And I think that happens a lot.
Yes, it does. Yes, because I hear about that strategy all the time. So,
and it doesn't have to be mom and dad. It can be anybody that's got the money. But some relative or mom and dad, but a lot
70% of the time it's mom.
But most of the time it's mom and dad.
Yeah.
Or maybe the grandparents. Another source of cash for a buyer to use, we talked about a little bit, 401k, home equity, and other investments. And those are pretty obvious sources of cash that a buyer could tap into to pay cash. And another option, I don't necessarily see this too much on, owner occupied, but another source of cash is hard money. Hard money lender. And
you're very experienced with this.
So I do a lot.
That's a buzzword. That's a buzzword for a lot of people, but you deal with that every day.
So I use hard money lending a lot.
Yeah.
But I will write a cash contract. So I'll go into a deal, I'll write a cash contract, but I'm really getting the money from a hard money lender. Now I do that. Obviously there's some risk in there that if for some reason my hard money lender doesn't come through, I got to come up with the cash. But I've got a rapport and relationship with most hard money lenders that I can just usually pick up the phone, call them and say, I need $300,000 on this in 30 days. This is the property. Am I good? They say you're good.
That takes time to develop that relationship. Yeah.
So that is a good source.
Yeah.
But you got to be comfortable enough that you've got that money committed to you. And I get people ask me all the time, is it okay to write a cash contract but get financing? Sure, why not? I personally do it all the time. But you need to make sure that if for some reason you can't get the money, that you're going to have to be able to pay cash. So there's many times I will write a cash contract, but I'm getting financing on the property. And it's never been an issue, never comes up, because at the end of the day, when the money gets wired into the attorney's account, it's the same amount of money. They don't care where it's coming from. But now so let's speak a little bit about hard money lending. It's expensive.
Yeah.
Usually most hard money lenders are going to charge you about 3.5 points. And I would say on average, you're looking at about 10.5% on the interest. Now, why would that make sense to somebody to do that? Well, it makes sense, one, if it's short term. If you need to use that money to get into a piece of property, get closed on it, and then sort through after you get the property to pull your money back out. I mean, who cares if it's 10.5% or 3? You just factor that into the deal. And if you're not going to carry this for a long period of time, in my mind, I don't see that as a big burden. For me, as an investor of using hard money, is that it is really tough for a guy like me or any investor to sit down with a bank and get money.
Right.
And I need to be nimble. When I go into a deal and offer cash on a piece of property, and if I don't have the money, but I'm getting financing instead, I cannot rely on a traditional lender to make that level of commitment to me. So that's why I use a hard money lender, because even though I'm paying for it, I don't have to jump through the hoops. I won't lose any sleep that I won't get the money, because with a traditional lender, no fault to you guys, but with a traditional lender, they can just run you ragged in terms of making a commitment to you, whether you're going to get the money or not.
And Anthony, it's all a numbers game for you, right?
Yeah,
I mean,
it's all a numbers game.
Yeah, even though it's 3.5 points and it's 10% interest, you're still crunched all the numbers down. And at the end of the day, is that you're still gonna make money on those properties based upon your investment strategy.
Yep, so,
Right,
yeah, just factor it into
right.
the deal.
Yeah.
But if I had to go to get financing traditionally and not offer cash and use hard money, I'm probably gonna lose the deal. So I almost have to go to them if I'm gonna do that sort of thing on a regular basis of buying property. So it puts me using a hard money lender, puts me in a position that I can pay cash, quote unquote, or I'm sorry, puts me in a position I can offer a cash contract.
Right.
Even though I'm really getting financing. And all the properties I've ever bought that I've done that, I've never been called out on it, because I show up at closing. And a lot of times
A briefcase full of cash.
With a
pop
yeah.
that bad boy open.
So, and I will tell you, most of the sellers don't even know where the money's coming from.
Right.
They just want to know it's there. So it's another way, again, you could rise and compete, especially on like maybe a fix and flip or a rental, to use a hard money lender, get in, buy it. And if it's short term, who cares? If it's long term, you could refinance the hard money lender out.
Right. Yep.
So there's some source of cash for a buyer to look at or consider prior to writing an offer.
Yeah, I have a girl that just did this. She got a hard money loan 8 months ago. She was going to use it as her primary. It was in rough shape. She couldn't get regular financing for it. She used a hard money loan. She went and fixed the whole property up, and then she refinanced it, paid the hard money guy off, and now has the property with equity in it. And that literally happened. So
now, if any of you guys want to know who the hard money lender guys are out there, shoot me an email or call me.
yeah,
I do referral business to those guys all the time. And I've got good relationships with them. So if you're looking at an investment property, or maybe you're fix and flip and want to pay cash but can't pay cash, you could talk to them, offer a cash contract, and use them for your source of funds.
Great. Yeah, you should be writing down your email address.
And I'm happy to give you some of you guys referrals on that.
Yeah.
Or if you're working with a client and want to do something like that.
Yeah.
So what are the sources? Say you get ready to put a piece of property on the market, but you want to try to find a cash buyer early on. There are some sources that are out there for a seller. And a lot of these things you know already. But you could reach out to home investors. We buy houses. There's another company called Sunday, and it's like the ice cream sundae.
Oh, really?
Yeah. They have a website. House flippers, guys like me. I have agents bring me stuff because they've got a house that is a disaster. And they understand getting this thing on the market and trying to sell it is going to be a chore. And the seller just doesn't have it within them to deal with it. They just want to make it happen. So a lot of times the properties that I buy are in really, really bad shape, meaning that there's structural issues. It's full of furniture. I don't care. I tell people, leave it there. I'll empty it out. So in those situations, the burden of the property is more than getting the cash or getting the most amount of money for it. So if you're working with a seller in that kind of situation, reach out to the house flippers, reach out to the We Buy Houses, some of these other wholesale type, guys who's gonna buy. Now let's talk about wholesalers. I'm not sure you guys understand what wholesalers are. I'm sure you've heard of them. But let me explain to you what wholesalers do. And there's a lot of them out there in our marketplace. Now they'll quote unquote offer you cash for property, but you gotta be a little careful with a wholesaler. A wholesaler is not gonna buy that property. And a lot of wholesalers are clear about that. A lot of them aren't. So what a wholesaler is gonna do is they're gonna get a piece of property on a contract. And then they're gonna have a time period in their contract for assignment. So with that guy who's wholesaling a piece of property, the seller thinks he's got a cash contract, and they do, but not really with the guy that they have the contract for. Because what the wholesaler is gonna do, they're gonna go out and try to find someone else to sell it to. And usually it is a cash buyer. So what a wholesaler does, a wholesaler never closes on it. They will go out, find someone to buy the property, then they will assign their contract to that buyer. So let's just say that you have a wholesaler that has a house on the contract for $100,000, okay? Then the wholesaler will go ahead and say, call me. I got this property, it's a great flip. Are you interested? I said, yeah, I'll take it. What they will do is assign that contract to me for $150, okay? Then we go to closing, all right? They never close on the property. What they do is that in the assignment agreement, I will basically, their assignment fee is $50,000. So I will have a contract with them where I'm paying them an assignment fee of 50. I'm paying 150. The wholesaler is getting 50, and the seller is getting 100.
Right.
That's a great business if you can make that work, because that wholesaler just made $50,000 on that property, but never put any of their own money in it. Okay. And that happens all the time.
Yeah.
The only thing I can say about wholesalers, it is a good avenue, maybe, to get the property sold. But if you already know house flippers in the marketplace, skip the wholesaler and go to them directly. More than likely, you're going to get more money out of a house flipper than you will a wholesaler, because the wholesaler wants to get paid the spread. Yeah. And I will tell you that some wholesalers are not real clear about how that process is working, and a lot of sellers can get their nose in a joint when they find out that they took their contract and just simply found another buyer and made $50K on the deal.
Right.
Even though it's a cash deal. So wholesalers are a good source for a seller to get their property sold to, but I think it would be the last resort. I think if you got someone in that situation, go find an investor that's out there, a house flipper, someone who's going to buy the property directly, and you eliminate and pay cash for it, and you eliminate the middleman. I think usually works out better for a seller in that situation.
Yep. Yep.
Any questions on any of that? All right, so we're at conclusion. I don't even know what time it is.
We've got 10 minutes.
Okay.
So good conclusion.
We're just gonna wrap up, and then if you got any questions, let us know. Anything you want to add, but so if you're working with a seller, just to wrap it up, consult with your client on the pros and the cons of working with a cash contract. Again, try to understand who you're doing business with under a cash contract by getting proof of funds, finding out a little bit more about that person. And again, I'm surprised out there in the marketplace, in the realtor community, how many people that doesn't get asked. Yeah. If you're working with the buyer, have them think long and hard. Talk to someone like Bill, talk to their financial planner about whether it's really in their best interest to put all their cash into one asset.
That is, if you talk to any advisors or you have financial advisors yourself, their buzzword is always diversification. Diversification of assets. And real estate is considered one of the diversification assets. So in terms of long-term financial strategies for your potential clients, is that it's always important that they're not heavily weighted in one asset class, like real estate. Well, I have all my real estate free and clear, but I have no retirement funds or I have no cash flow. So it's part of a comprehensive strategy to make sure that sometimes it really doesn't make sense to pay cash. So make sure that your clients are talking with their financial advisor and lenders to come up with the right strategy for their financial scenario. So exactly correct, Anthony. Yeah.
So, and again, you can also talk to someone like Bill that we mentioned it earlier where you pay cash, but then you try to get your money back.
That happens, yes. Parents come in and say, you know what, I want to pay cash for my kids for this. I want it to be competitive. They've lost out on a couple offers, a very competitive market. That happens, yes, exactly right, Anthony. Yeah.
So there are ways to go ahead, pay the cash, but then for them to get their money back out of it.
Yeah. Yeah.
Is there any way for them to get all their money back out?
No.
Usually not. So there's gonna be 20% left on the table typically, but that's okay. You know, usually mom and dad don't have a problem with that.
Yeah, again, the only reason you can't go to 100% because you can't do delayed financing on government loans. And government loans are pretty much the ones that go to 100%, 97.5%, 95%. So.
Okay.
So, but if you get if you just refinance after a year rather than 6 months, what's the difference?
Oh yeah, then you can't. Yeah, then it depends on after 1 year, you can use the appraised value of the property. Prior to that year, you have to use the acquisition cost.
Oh, you're
So
saying
exactly
within 6 months, they don't do an appraisal?
After 12 months, you can use the appraised value of the property. And before that, it has to be the acquisition cost of the house.
Well, but that seems like a good thing to like not have to pay for an appraisal and worry if that's going to come back.
Right. Yeah, that's it. Good. Absolutely. Yes.
But you were stating that the delayed closing is only within 6 months. What's between 6 and 12 months or what?
Yeah, because when you do a cash out refinance, the only way to use the appraised value of the property is after 12 months. So there's a cap, you can't do a cash out refinance under 6 months period. So that's a Fannie and Freddie rule. So what they say is that if it's delayed financing rule, you can treat that as a cash out refinance, even though you have not been on title for 12 months. You still might have to order an appraisal, but it's going to go up the lesser of the two, the appraised value or the purchase price. So in that case, even if let's say you bought a house and it came in at 200,000, the appraisal came in at 200, you bought it for 150. Even though the appraisal came in at 200, when you do delayed financing, they're going to go off the 150. Right. The acquisition. The only time in financing that you can use the appraised value of the property to do it for a cash out refinance is after you've seasoned on title for 12 months. Only way you do that.
Yeah, I'm picturing the opposite would be the case, that you would pay over the appraised value, but.
Oh, yeah, okay. Yeah. Well, not that usually I haven't ran into that problem. Not in this market.
Any other questions?
Good questions though. Very good.
I had a quick question about appraisal waivers. This is Chris Axon at Nest Realty. Thank you guys, by the way. Jumbo loans, are those excluded from appraisal waivers? I feel like I heard that recently, but wanted to verify.
Yes, they are. Yes. I have not ever gotten a jumbo loan appraisal waiver ever in my 21 years of doing this. I don't think it is excluded, but I don't think I've ever seen one at that high of a price. Because what happens is when everything is risk tolerance when you run it through this automated system. So you put in their credit score, their assets, the loan program, everything, and you put in the address and it spits out whether or not that, and if you have a high loan to value, if you're over that 766,000, I have not gotten an appraisal waiver on that. I don't know, I can't recall if it's not acceptable, but I have never gotten it.
All right, thank you. And then
Yeah, you're
related question while we're there, are you able to tell before making an offer, or I suppose before ratifying a contract on a property, if it will qualify for an appraisal waiver? And if you're able to do that,
That is a very important step. Like, this is where the communication with your lender becomes imperative. Like, you need to be able to call your lender. He needs to make sure that it's already been underwritten it's already been through the automated system, and all he or she has to do is put that address in. You know, because right now, before you have an address, you write in "to be determined" as the property address on the automated system, and you put in their credit report, you put in their credit report and assets and income, but you don't have an appraisal waiver until you put that address in there. So you got to be able to call your lender very quickly, have them pop that address in there. They've already got it. They should have everything else already in there. They've already ran it. They've gotten pre-approved. Pop that address in there and tell you if you've got the appraisal waiver. You can't get the appraisal waiver on "to be determined."
yeah, got it. Okay,
Yeah.
that makes sense. Is
Yeah.
there any cost to the? Sorry, I guess I'm doing three.
No.
I assume that hits the clients. That's a hard inquiry on their credit. Is that true? And then
Not
is there any cost to the
necessarily.
lender?
No, that is not. So we now the Fannie and Freddie have come out with, you can use soft pulls to well, if you do a platinum pre-approval, which means that you go through underwriting, then yes, it will be a hard pull on their credit. But if you're just still at the point where you want to see if just the appraisal waiver comes in, then they can still work off a soft pull for that.
Cool, helpful. Thank you.
Yeah, you're welcome.
Any other questions for us? Well, if you do have any questions or need any recommendations about anything, or want to learn more about the platinum approval process, or have any questions for me, just reach out to us.
Yeah, thanks guys. Thanks for taking your time today for an hour and learning a little bit. And thanks for having us and hosting us. And yeah, any questions, let us know.
Thank you.
All right, thanks guys.
Thank you.
Thank you guys so much. Sorry, I'm at the receptionist desk. I don't know if you can hear me.
Yeah, we can hear you.
But
Yeah.
thank you so much for coming today. We really appreciate your expertise. For all those who attended today, we did record this session, so it is going to be posted in the CARS news group on Monday. I'd like to talk about some upcoming events that CAR is going to have. This upcoming Thursday, we have our CAR Reconnect Conference and Expo, where we're getting some fabulous economic updates from the National Home Builders Association, the National Association of Realtors, and the Virginia Association of Realtors. Check it out on our CAR Education and Events calendar. There are some raffles. You get to meet with over 20 affiliates that are going to have their expo booths there as well. And we also have a GRI class coming up, GRI 506 Risk Management, on Monday, September 16th with Michael Guthrie, which is going to be very exciting. It is hybrid. And then we have our broker CE classes on Thursday, October 3rd. You get your 2 hours of broker supervision and 6 hours of broker management with Donna Patton and Michael Guthrie here at the Hillsdale Conference Center. And then RPAC is having a murder mystery dinner, Titanic themed, which is very exciting, on October 8th. If you head to the RPAC table during the CAR Reconnect conference, then you'll get a discount on your ticket. And last, we have our October Sweet 16 coming up, where you can obtain all 16 hours of your continuing education credits on Thursday, October 17th and Thursday, October 24th. So October is a big month for brokers and realtors who need their education credits by the end of the year. So once again, thank you so much, Anthony and Bill, for your wonderful expertise. I know everyone on here very much appreciated everything that you had to share. I hope everyone has a great weekend, and we hope to see you at the CAR Reconnect Conference and Expo on Thursday.